A few months ago, I published a video explaining why I believe Micron was one of the best short opportunities in the market. I laid out my entire thesis. I talked about the cyclical nature of memory, the dangers of oversupply, the low forward P trap, the explosion in capital expenditures, and why history suggested that eventually the memory cycle would turn. The level of trash talking was pretty remarkable. Actually, it told me a lot about people behind a keyboard. It is what it is, but chill, people. Just chill. Just chill. Okay. With that being said, today I need to own something. I was wrong. Not about the thesis. I was wrong about the timing. And if you're going to invest successfully over decades, you have to be mature enough to admit when the market proves you early instead of immediately proving you right. One of the biggest mistakes investors make isn't having a bad thesis, it's forcing a good thesis into a bad timeline. There's a massive difference. Today, I want to explain exactly why I believe my original analysis still has merit, why Micron continues to face the same long-term cyclical risks, but why I underestimated one thing that completely changed the near-term picture. Hey there, my name is Anthony and welcome to Growing Your Wealth. The easiest thing in investing is to rewrite history. After a stock goes higher, people suddenly act like the outcome was obvious all along. It wasn't. My thesis wasn't built around emotion, and it certainly wasn't built around disliking Micron. In fact, I repeatedly said I believed Micron was an outstanding company. I was simply looking at history. Memory has always been one of the most cyclical businesses on the planet. Every cycle has looked remarkably similar. Demand surges, prices explode, margins reach record highs, companies rush to build additional capacity, supply eventually catches demand, pricing weakens, margins collapse, and the cycle resets.
Multiple memory chips are needed to support each GPU or CPU, and that means making memory takes more space than other kinds of chips.
The new fab that we're building in Boise, Idaho right now that we're just poured concrete on in October will be over 600,000 square feet. So over 12 times of the size that you see behind me. In addition to that, in New York, we're going to build 4 of those 600,000 square foot fabs for a total of 2.4 million square feet.
At $100 billion over 20 years, Micron's investment in 4 chip fabrication plants or fabs in upstate New York is slated to be the biggest U.S. chip project in history. It's a commitment Micron made with some big help from New York and a bid for National CHIPS Act funding.
We have to make it worth their while. It's still a competitive environment. We're competing with the rest of the globe.
But being the only U.S. memory maker also comes with risk. Micron is the latest target of China's bans on U.S. chips, as the two countries vie for technological dominance.
That has happened over and over again for decades. So when I saw Micron trading at an extremely low forward multiple while earnings exploding, I believe we were approaching another peak. Historically, that's exactly where investors get hurt. But history isn't a stopwatch. History gives you probabilities, not exact dates. It tells you what is likely to happen, not when the market will decide to recognize it. This is where I was wrong. Okay, I admit that. The market wasn't ignoring the risks. It simply cared about something much more bigger. Artificial intelligence. More specifically, it's going to be high bandwidth memory, or HBM. HBM has become one of the most important components inside modern AI accelerators. Every GPU designed for training large language models requires enormous amounts of ultra-fast memory. Companies aren't just buying GPUs anymore. They're buying the entire ecosystem that surrounds them. Micron, it happens to be one of the very few companies capable of supplying this technology at scale. That changed everything. Not forever, but certainly much longer than I anticipated. Think about it like this. Imagine you own a hotel during the biggest sporting event your city has ever hosted. Normally, you're worried about occupancy rates, competitors opening new hotels, and whether demand will eventually slow. Those concerns are completely valid, but if every single room is booked for the next 2 years, you're not worried about next year's competition today. You're raising prices, maximizing profits, and accelerating every reservation you possibly can. That's exactly what's happening inside the HBM market. Demand has completely overwhelmed supply. As long as customers continue, ordering every chip Micron can manufacture, investors aren't focused on what happens 3 years from now. They're focused on what's happening this quarter. That distinction is incredibly important. Now, does that invalidate my original concerns? Absolutely not. It simply delays them. Eventually, Samsung expands capacity, SK Hynix, they'll expand capacity, Micron expands, the hyperscalers finish building a significant portion of their AI infrastructure, and supply and demand begin to normalize. The question has never really been if, it's always been when. I technically believed when would arrive much sooner than it has. The market believed otherwise. Right now, the market is winning that argument. One of the hardest lessons in investing is understanding that you can correctly predict the destination while still missing the timing. You don't get rewarded simply for eventually being right. You get rewarded when the market agrees with you. Timing matters far more than most investors realize. Another thing I underestimated was the power of the narrative. Fundamentals absolutely matter. Cash flow matters. Margins matter. Valuations, they matter. But in the short term, narratives often move stocks much further than fundamentals alone. Think of GameStop and AMC in the past. Right now, the AI narrative is stronger than almost anything we've witnessed since the internet boom. Investors are willing to pay extraordinary prices for companies directly tied to artificial intelligence, and Micron sits squarely inside that story. Every new AI data center announcement, every GPU shipment, every cloud expansion, every sovereign AI initiative continues feeding demand for memory. That doesn't eliminate cyclicality, but it's certainly extensive. Markets don't price today's earnings. They price tomorrow's expectations. When I originally shorted Micron, I was looking beyond today's extraordinary earnings and asking what profitability looked like after supply eventually normalized. The market wasn't asking that question yet. Instead, it was asking how much stronger the cycle could become before it finally peaked. Those are two completely different questions, and that's why we reached two completely different conclusions. And don't get me wrong, I didn't lose money on my position. I just wasn't able to capitalize the way I anticipated. I also don't want to become the type of investor who refuses to admit mistakes. If new information changes the profitability, I have to change with it. That's not weakness, that's discipline. Too many investors become emotionally attached to their positions. Instead of evaluating new facts, they spend all their energy defending their egos. Don't do that, okay? Because, realistically, the market could not care less about our egos. It rewards adaptability, and I need you to hear something. Understand the risks before you pile into a company like Micron or any other memory business. Enjoy the money you're making, but don't get caught when it flips. Remain disciplined and understand what you hold. Don't continue to chase the stock as it runs up, because when it does flip, I can assure you, I'm telling you, I can assure you it will. Don't be caught holding that bag. You'll see a pullback and expect the same run up, but it would just keep falling. The stock will sell off before the fundamentals correct, so just know that, okay? Know it. Okay, here's some more advice. Being early often looks exactly like being wrong. Sometimes those two things ultimately become the same thing. Other times, being early simply means your capital was tied up while other opportunities continue compounding elsewhere. Opportunity cost is real. Even if Micron eventually experiences the margin compression I originally discussed, that doesn't erase months of upside that occurred while waiting for that thesis to play out. Timing isn't just important, it's part of the investment thesis itself. So, where do I stand today? I still believe memory remains a cyclical business. I still believe massive capital expenditures eventually create oversupply. I still believe margins normalize over time. I still believe investors should be cautious whenever a commodity business appears incredibly cheap during peak profitability. None of those beliefs have changed. What has changed is my appreciation for the strength of this AI demand cycle.
These actually have billions and many billions of memory bits that store information in ones and zeros in them.
Data is at the center of all our devices and generative AI. And accessing and storing that data requires these memory chips. And there's only one major memory maker based in the US.
Micron, the maker of basic DRAM chips, the building blocks of all memory.
I underestimated how powerful it would become. I underestimated how long supply constraints could persist. And I underestimated how willing investors would be to continue paying for future growth. That's on me. That's on me. The biggest takeaway from all of this isn't even about Micron. It's about investing itself. The market humbles everyone. Nobody bats 1,000. Even the greatest investors in history have been spectacularly wrong. The difference isn't avoiding mistakes altogether. It's recognizing them, learning from them, and becoming a better investor because of them. That's how wealth compounds over decades, not by being perfect, but by consistently improving your decision making. I'll continue watching Micron closely. Maybe the cycle finally rolls over next year, or maybe the end of this year. Maybe it takes several more years, who knows? Nobody knows that technically with certainty, but what I do know is that I'll approach the next opportunity with a much greater appreciation for timing. A thesis without timing is like owning a map without knowing where the train leaves. Eventually, you might reach the destination, but you could easily miss the opportunity along the way. I'll leave you with a verse that perfectly captures this lesson. And I've said this before. In Ecclesiastes 3:1, we are reminded, to everything there is a season, and a time for every purpose under heaven. Investing has seasons too. There is a season to buy, a season to hold, and a season to sell. Sometimes there's even a season where your thesis is right, but your timing it's wrong. All right. That is it. Let me know your thoughts in the comments below. Is my thesis correct on the memory cycle, or is Micron just going to keep running up? If you're interested to hear my thoughts on a super speculative, super high growth, energy company and their Q1 earnings, look right here. Just click it. It's on the company Hynix Holdings and how they plan to tackle the energy supply crisis for these AI data centers. So yeah, think about that. As always, happy investing, and may God truly bless each and every one of you.